All right, so our first presentation, as I mentioned, we're going to be hearing from Kemp Anderson. I think it's a really great topic, as I think from folks that we speak with, making that first million, it's some of the best times and some of the most challenging times for them. I know you know, a lot of folks in the industry actually, that's when we talk to them and kind of reflect on their story, they say that was really what they loved doing, was chasing that first million. And so we're going to hear from Kemp Anderson. He's going to talk about how, you know, the day-to-day demands of operating a business and sometimes can get in the way of building a business with the goal of creating financial assets that pay dividends for you and your family. So Kemp, we're going to hear from Kemp Anderson. And Kemp's a longtime M&A specialist with extensive experience driving revenue growth and building value. And he offers advice to grow your businesses and also one of the things from working with Kemp, what he really focuses on is how you can take your company to the next level. So with that, we're going to turn things over to Kemp. Kemp?
Yeah, thank you, Brad. I wanted to say thank you to PCT, GIE, Brad, Dan, the team, and the sponsors as well for continuing to do the M&A virtual conference. I think it's a really great event and an informative event for everybody that gets on and takes the time. So next slide, please. So I wanted to sort of start here with a quote from Martina Navratilova. Everybody probably knows who she is. One of the things that she said when asked about her success was the difference between involvement and commitment is like ham and eggs. She says the chicken is involved, the pig is committed. So why would I put that up there and start with that? And I think that if you're going to get to your first million, if you're going to get beyond your first million and you are going to eventually one day exit, there's an awful lot of commitment involved in that. A lot of work around best practices, a lot of focus on building a business around value, a lot of commitment around growth and commitment towards an exit. A lot of people may not realize that Martina Navratilova actually won 18 Grand Slams. Her career was 31 years from 1975 to 2006. And her record, believe it or not, she had 1,442 wins against 219 losses. Her win percent was 86.8. She was very committed to winning in her area. And I think I wanted to sort of start out with, you know, how committed are we to the business? How committed are we to the industry? How committed are we to best practices? How committed is your leadership team to best practices and working towards an exit over time? Whether that's in the near term or the long term, it's still a good thing to be aware of. If you think about successful people that you may know, most ultra successful businesses, ultra successful people are very, very committed, whether it's their family, their business, or their community. So I thought that this was perhaps a good way to get going. Next slide, please. So getting to $1 million and beyond, you really need to focus on best practices and stress best practices basically every day in the business at every level. You know, you want to scrutinize the business on a regular basis, be your own critic, scrutinize profits, scrutinize your growth. I think the information that Gary Kroll puts out every year is fantastic. And if you think about the compounded annual growth rate of the industry being at currently north of 5%, then the question would be, should your business grow at a minimum of the compounded annual growth rate of the industry? In a lot of cases, especially on the top 100, they grow significantly more than the industry compounded annual growth. So when you're looking at best practices inside your business, you really almost want to break it down into silos. Sometimes people think that's a bad word or not a healthy thing for a business, but look at every department. And even if your business is small and you don't have quote unquote departments, then look at every function. So in your human resources, and we'll jump into a little bit more of this as we go along, but your human resources, are you a drug-free workplace? And not only when you hire, but if there's a workplace accident, if there's a substantiated customer complaint, are you enforcing a drug-free workplace? Our employees in our industry are driving around in trucks. They're in our customers' homes in a lot of cases. And it seems to be a high demand thing in an acquisition that buyers are looking for, and sellers should be a drug-free workplace, not only for the acquisition ultimately, but also for the customers and the employees' well-being as well. Are you doing MVR and driver's license checks on a regular basis? If it's a position in the field, a lot of companies do physicals. Are you doing criminal background checks? What kind of ongoing training do you have for your employees? And another thing that will almost always come up, or will always come up in an acquisition, are non-competes. Do you have assignable non-competes in the in your business that are built around the non-compete statutes in the states that you operate? And are they assignable from the current business owner to potentially a buyer on the exit? You think about customer service, retention. Do you know your retention? Do you know it by month? Do you know it by service? Do you know it by location if you have multiple locations? Customer service, customer retention are obviously key drivers, but is it something that you're really focused on all the time? And that will help you with your growth. When you're looking at marketing, how digital is your company today? And do you have plans to become a more digitally based company moving forward? From a marketing perspective, are you really focused on the customer and the customer needs and the things that you can do for the customers? From a financial perspective, how often do you do P&L reviews? How often do you do balance sheet reviews? How often are you looking at your AR, and are you looking at the AR by aging buckets over time? How good is your collections? How focused are you on pricing? Do you have things in place or coming that the customers are now looking for? Concepts like easy pay, where they can pay with their phone or with a tablet and make it really an easy, enjoyable experience for the customer. What are the conditions of your assets? Think about your fleet. How often do you really go out and look at your fleet? What is the condition of the fleet? How are your products and your chemicals and your equipment managed in the fleet every day? How often do you do inspections? These are critical things, not only to run the business with best practices, but these are going to come up every single time you go to sell your business. When you look at the IT, are you doing routing? Are you paperless? Are you using IT to communicate with customers? All these best practices are things that you can focus on. Geography, to a large degree, geography will play a part in the value of your business. To a large degree, it's not really controllable, but inside your geography, you can obviously control your density. So there's a lot to think about in terms of best practices, being prepared all the time in your business, being critical in your business, and understanding how those things relate to the value of your business. Next slide, please. So when you look at your business, are you looking at the customer focus? When you look at the growth on the core of the business, what kind of service lines do you have? Different service lines carry different values. Obviously, pest control, termite, fume, lawn tree shrub, rodent, mosquito, bed bugs, on and on and on. All these service lines actually have different profit margins. Therefore, they have different values. And the service lines actually, can you satisfy the customers? Can you solve their problems with competency? How quickly can you move the customer to being a loyal customer? A lot of studies show that the longer you have the customer, the more loyal the customer becomes, and that's directly related to retention. Once you get a new customer, how do you manage that retention? How do you communicate? And is it easy for the customer? And do they believe in what you do? And do they believe in the brand? And can you convert the customer to a brand ambassador? How do you improve retention? Again, we're back to customer focus. Do you have bundles? Do you say, you know, we have pest control plus rodent, pest control plus rodent plus mosquito, and on and on and on. Bundles actually do lead to more loyalty. So what kind of service offerings do you have is a critical piece of retention. The other piece that a lot of people don't think about day in and day out is understanding what your competitors are up to. Are you doing competitive analysis in every market that you're in, whether you're in one market or whether you're in 20 markets? Do you understand your competitors' offerings? Do you understand their frequency? Do you understand their pricing? These are all things that become critical to how your customer or how your company will manage and focus on the customer themselves. So also from new service offerings, you know, from time to time, are you keeping pace? Are you paying attention to things like PCT and hearing what is going on in the market? Hang on 1 second. Okay. So do you understand, are you able to offer new services, whether it's you haven't offered termite or you're going to start offering wildlife? New service offerings are important to stay in pace with the industry and offer customers new opportunities to stay with you. And then as you grow beyond $1 million, are you going to consider acquisitions and growing through acquisitions, whether that's small, one truck, or whether that's multiple trucks? It is another way to get more customers rapidly and grow beyond $1 million as your company evolves. Next slide, please. So key drivers, one thing I would say is profit is not a bad word. And a lot of times we don't necessarily talk enough about profit and what drives value. So I would start with price leadership. A lot of companies shy away from this subject. When you look at the bigger companies, certainly almost all the companies that I'm aware of on the top 100 as an example, certainly the Orkins, the Terminix, Rentokils, they're going to have regular price increases. And this really is part of a healthy company. And I would recommend that everybody certainly consider this. How often do you do it? Do you do it every year? Do you do it every other year? Are you raising your new prices every year? It's very, very important to stay relevant and not become a low-cost provider. Certainly, some companies, that is a part of their strategy. but that will actually affect retention and other subjects. So another key driver is brand strength. It's critical to understand how your brand is viewed in the market. I would circle back to what does your trucks look like? What do your uniforms look like? Do you have appearance standards? We're back to those assets. We're back to the HR subjects. They all certainly reflect on your brand. When you look at cost to serve, how often, we're back to the financial review, right? How often are you doing P&L reviews? How often are you looking at your cost of goods? Most companies in our industry consider cost of goods to be three basic things, which is fleet, chemical inventory, and labor cost. Are you doing things to affect your P&L, whether it's route density, that could be fuel cost and fleet cost? Are you pricing your products with vendors, and so on and so on? And then, at the end of the day, you really need to make sure that you are looking at the profit drivers or the value drivers in the business, and make sure that everybody in the organization understands the importance of these subjects. Next slide, please. So, tools for growth. I would say that a lot of us in the industry certainly have similar tools, although we use them in very different ways. When you look at your CRM system, whether you're using TestPack or ServSuite, or even if you're using QuickBooks, how are you using it? Are you using it to gain efficiencies, to gain business knowledge, and to support the company, the employees, and the customers, which will ultimately enhance your value? The old cliche, garbage in, garbage out, certainly comes to mind. You want to make sure that you're working with your people to make sure that you have data integrity as you grow, as you analyze your business, and as you ultimately sell it one day. Data integrity will certainly be key. When you look at the customers today, and we'll talk about this in a little bit more detail, mobile customer management. Customers are going digital. I would venture to guess that most people on this call have a smartphone, if not everybody. Some of us may bank with our phone, certainly communicate with our family and friends, and our customers are no different. Is your business able to leverage that as a positive thing with your customer base? When you look at routing, are you focused on density? Density and routing really drives profit. The interesting thing from my perspective about that is that it's not on the P&L. You have to go find it. But is it a piece of your company's DNA that you are looking at on a regular basis? I'm going to circle back to price optimization. Are you competitive? Are you a quality provider? Are you strong enough in your leadership to raise prices and not be afraid of that subject? How in the new offer developments, are you paying attention to industry trends, whether it's mosquito or bed bug or a lot of other things that come up and change from time to time? Is your company and leadership taking advantage of that? And then people acquisition, people development. This to me is key. We, at the end of the day, I believe, are a people business. A lot of times, the pest control side of the business can be one of the easier things that we do, but retaining people and retaining customers can be one of the more difficult things that we do. Are we focused on training all the time, all the people. How do we communicate with our customers? These are the subjects that drive the business well into the future in a really healthy way beyond your first million. If you're past your first million, you know, don't forget about the real people-driven aspect of this business. Next slide, please. So marketing and brand focus, how much do you invest in marketing? This is a tough subject for a lot of business owners in our space. It's sometimes hard to quantify. I would tell you that with most privately held businesses in our industry, a good benchmark is 5 to 10% of revenue. That is a good number to look at for marketing. What channels do you use? Do you use AdWords? Do you use SEO? Do you use social media? Do you use direct mail? Do you use trade shows? Can you measure it? Can you look at the ROI on a channel? If it's a trade show and you spent $100 at the trade show and you got $1,000 worth of new business, it's easy to validate the ROI on that particular event, but can you do it in all channels all the time? So do you use email with your customers? Again, we're back to the digital piece. This is where the industry is going. If you look at a lot of the metrics that are out there. So, you know, are you communicating with your customers digitally, and how are you doing it? Is it fresh information and appropriate information and relevant information? And one of the old school ways, I would say, I started in the business in 98, and I would say that referrals, I remember back at Sears, Termite and Pest Control, you know, one of the fundamentals of that business was getting referrals. And they happen to be one of the best retaining customers that we can get. So, you know, if you have communication and you have trust with your employees and your customers, you'll have referrals, you'll have retention, and you will certainly move your marketing forward. So next slide, please. So according to Google, when we think about being mobile friendly, 58% of all searches occur on a mobile device. You know, the nice thing about that is that almost every digital channel is pretty easy to measure. 80% of Americans have smartphones. 43% of senior citizens. I remember the first time I got a text from my dad. I couldn't believe it. But you know, that is the way that it is going, is digital marketing. So you know, whether it's 57% use more than one device, whether it's a laptop, whether it's a smartphone or a tablet, iPad, 27% use smartphone only. So when you think about Michael Porter, who's a Harvard business professor and talks about these subjects all the time, one of the things he says is innovation is the central issue in economic prosperity. You know, it would be interesting to know how much the digital movement in the pest control industry is fueling the 5+% compounded annual growth that we saw at the beginning with Brad opening these talks with the information from Gary Curl. This is absolutely where things are going in terms of how we communicate with our customers and how we market to them. And it is a big part of growing the business. Next slide, please. So getting beyond your first million, we'll jump into some acquisition discussions. Next slide. So why grow through acquisition? So we will certainly get into this. There's a lot of reasons to do it. You will certainly reduce competition. In some cases, it might be a 1 truck or 3 truck operation. In some cases, as Brad pointed out at the beginning, it could be a top 100 company. So the M&A market is certainly remains red hot. So it is an opportunity to capture market share and to grow. There's a lot of pluses that happen. You certainly get economies of scale. You certainly get learning from an acquisition, whether it's how other companies may market, how they communicate with their customer, whether it's route density. You're going to pick things up in every deal. You'll get some scars along the way, but you are also certainly going to get a lot of positives, including amplified growth that comes through mergers and acquisitions. Next slide, please. So, next slide. So as your business grows, as your business acquires over time, certainly you get revenue enhancement. You will probably pick up additional service lines. You will obviously get new clients. You will have the opportunity to cross-sell. One of the absolute most powerful things that you get in acquisitions is quality people. There are leaders in the industry, certainly at Orkin, Terminix, Rentokil, and other big companies all over our industry that have leaders that came through the acquisition channel. You know, it's an absolutely fantastic way to get new talent. So in some cases, you can upgrade your team. That is certainly something that happens from time to time. You pick up density, you will pick up scale, and if done right, and I'm sure Dan Gordon will talk about this later, you certainly pick up a great deal of financial benefit as well. Next slide, please. So when we look at the pest control industry in terms of M&A, I would say basically there's 2 forms of acquisition. One is certainly stock purchase. This is very rare. It is also typically, when it does happen, it is with the bigger transactions that we see. And of course, a stock transaction is when the buyer not only purchases the assets, but also is assuming all liabilities as well. The primary acquisition method that we see is asset purchase. I would say almost every deal that we see, certainly in the high 90% range, is an asset purchase where the buyer does not take on any debt, does not take on any liabilities, and the assets need to be delivered debt-free. So those are pretty standard terms in an asset purchase. I think really you look at what I would boil it down to 3 types of buyers. One being a global buyer. Perhaps there's 4 in that group: Rentokil, Orkin, Terminix, and Cemex. I think regional buyers, this is a pretty big group. It could be the Arrows of the world, Massey, Clark's. A lot of the companies on the PCT Top 100 would, from time to time, be considered regional buyers. And then you have local buyers. And there is a lot of companies out there that acquire small companies. One small company in a market could be acquiring another one. We just don't hear about them. They don't make as much news. But when you look at our industry, when you look at over $8 billion in the U.S. and roughly 20,000 pest control companies, there is a lot of transactions going on that we don't hear about with local buyers. And it is a great way to grow your business, whether you're trying to push past $1 million or you're well past $1 million. So next slide, please. So sources of value. This is what I would call hard value. And by that, I'm talking about things that we can easily see, buyers and sellers can easily see on a P&L or a balance sheet. So you can certainly see cost of goods. This is typically in the 70% range with about 50% in payroll. These are sort of typical numbers, 10% in chemical cost, 10% in fleet cost. You can certainly see the cost of goods, and you can see the numbers pretty easily. You can see year-over-year growth. Again, if we're looking at the industry now with over 5% annual growth rate, then, I would suggest that a lot of the businesses in the industry should be doing that or more. Year-over-year profit, we'll talk about EBITDA in a few minutes, but a lot of times you want to see, or the sellers and pest control companies need to see EBITDA in the range of 20% plus. And that's pretty important and pretty easy to see. And then usually in transactions, you'll see what's called owner adjustments. Some people call them add backs. There's other descriptions for them. And these are things that if there's a transaction, then obviously these are things that may be running through the business P&L today, but when the transaction's done, they won't be running through the P&L anymore. That could be a few examples, could be an owner's vehicle, owners and owners' family cell phones. Those sorts of things leave the business in a transaction. And then balance sheet, again, whether it's an asset purchase or a stock purchase, what is the debt? One of the things that buyers and sellers always have to work through and discuss and disclose is accounts payable, prepaid accounts. Accounts receivable is obviously where work's been done but has not been paid for, as opposed to prepaid accounts where money has been given to a company but the services have not been done yet. This is a credit and a debit in a transaction. Accounts payable, inventory in transactions is a dollar for dollar for usable inventory, typically done on the day of close or the night before. Values on operations and office and operations equipment. Fleet, if it's leased, it would be typically assumed. If it's owned, it would be delivered debt-free. And then goodwill. The bulk of our industry is allocated to goodwill. That is our customer base, and the customer base is the primary asset. So next slide, please. So what I would call soft values when you look at acquisitions, again, whether you're buying or selling, is things that you may have to display or demonstrate if you're the seller, and if you're the buyer, you may have to dig to find from time to time. These things are not always easily found. They're certainly typically not on financial statements, and that's things like route density, zip code density. Certainly the softwares today, the PestPack, the Serve Suites, and others can give us data, customer count, services, revenue by zip code. These are value drivers, critical value drivers. Employee tenure is an absolutely critical number for most buyers, and the HR best practices are critical as well. The renewal base, the recurring base versus the one-time service customer base is always going to be looked at. Customer retention, certainly. One that gets discussed and sometimes throws people for a loop is culture. I typically define that as, what does your company value and what does your company believe in? When you understand those two subjects, you typically have a pretty good feel for the culture of a company. And then service types, which we've already touched on. Again, you know, are they priced right? Are they bundled? Is there easy pay? What kind of services are they? Are they relevant to the geography? Buyers in our industry will typically, over time, begin to inject their policies and procedures into the company that they buy, including a price increase over time, which is always a reason that buyers will want to see if a seller has done price increases, or will the first time that a buyer does it send the customer into shock. These are relevant subjects. Revenue per truck, revenue per employee. It could be revenue per employee based on, is it a technician? Is it a salesperson? Is it an admin person? So it could be revenue per employee per position. What kind of offerings are happening inside the company? Is the company keeping pace with the industry? And then you know, all the ways that IT certainly plays a role in the business, and is the seller driving efficiency with IT? So these are things that I would say are soft value, but they're always discoverable, and typically buyers want to discover them and understand what's going on in that business. So next slide, please. So from an M&A cycle, a lot of buyers, and again, whether it's local, regional, or international buyer, are going to have an acquisition strategy. In my belief, a lot of the strategies are slightly different. It could even be slightly different inside of a company. If some buyer may say, well, I need a big company here and a small company in this geography, and we want to do an international transaction in Canada as well. So the strategies can vary. The deal thesis can certainly vary, and we'll talk about that briefly. The due diligence process varies from transaction to transaction, buyer to buyer, and the integration planning. Most buyers will want the sellers to stay engaged and help with the transaction to make sure that the employees and the customers stay after the day of close, and sellers typically play a pretty critical role in that. So next slide, please. So from a strategy perspective, buyers view this basically as a channel for growth. The buyers that are out there that have acquisition as something that they do all the time, whether that's Orkin or Terminex or Rent-A-Kill, that have acquisition departments, they have a strategy. They're looking to create value. They're looking to acquire companies that have great retention and also great people inside the company that will add value after close. The buyers want value. The sellers, conversely, have to demonstrate value. That's critical. They have to be able to demonstrate where the value is in their business. The more value, typically the more best practices, the more that a transaction will be worth for the seller. So that's, really, really part of the strategy. The buyers are always looking to create value. The seller has to be able to demonstrate it. Next slide, please. So deal thesis, how does the deal make sense to the buyer? A lot of buyers, if they have an acquisition department, they have to go get approval from an executive team. The executive team, based on the size of the transaction, may have to get approval from the board. This is where the deal thesis comes in. Does this deal make sense? Why does it make sense? So buyers, as deals move forward, as transactions move forward, buyers effectively leave no stone unturned. I heard a CFO say one time in our industry, once we get to a letter of intent, we have to be able to look under the hood, look under the kimono. We have to be able to look at everything, because once that wire happens, they own it and they have the right to know what they're going to own. And that is where the deal thesis comes in. Next slide, please. So when you think about diligence and the valuation, a lot of buyers go into it with the intent every time they're looking for acquisitions. That doesn't mean they buy everything that they see, because they don't. They really, really don't. They will go through due diligence before an LOI. They'll want to see standard things, P&Ls, balance sheets. They'll want to see tax returns. They'll want to understand the assets, the AR, the inventory, the geography. They'll make an offer. If an offer is agreed to, that's when you're going to get to due diligence, which basically leaves no stone unturned. And this is a critical piece when you go from understanding the business and having meetings and discussions to negotiating offers, and from negotiating offers to getting to the actual due diligence. And when you think about valuations, there's a lot of different methods that buyers will use. So next slide, please. I'm not going to jump too deep into this, but I will say that there's certainly a lot of formulas and a lot of ways that buyers look at the deals. One of the, I think, oldest is EBITDA and multiple of EBITDA. And if you think about a pest control company that does $1 million in revenue and has 20% adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization, with the owner's add backs on $1 million, they have 20% adjusted EBITDA. That's $200,000. If the multiple long time ago when I started in the business was, say, 3 to 5 times the adjusted EBITDA of $200,000, that would be $600,000 or $1 million offer for $1 million company, which is where a lot of times we used to hear the phrase dollar for dollar. That's sort of where that all came from. That multiple today is significantly bigger. And there's several other ways other than EBITDA to look at the valuation of acquisitions, whether it's internal rate of return, calculating the return on the deal, ROIC, return on invested capital, discounted cash flow, which is very detailed, net present value. And then in some cases, there's what's called a strategic purchase. And this could be where a company thinks or believes that they need or want an acquisition so bad and they find it, whether it's geography based or just company based, or it's a company maybe entering the US or entering a certain market, and these valuation metrics go out the window, and that buyer is going to do whatever it takes to get that company. So that does happen from time to time. If you're a seller, I would tell you that it is very, very rare. But these are the types of valuation metrics and different iterations that buyers and M&A departments will certainly jump through as they're out there making offers. Next slide, please. So when it comes to integration planning, there's a lot of value delivery here, right? So if a buyer is going to buy a company, they're certainly going to have a plan on what's going to happen to that company after close. I would say in almost all cases, not all cases, but almost all cases, the buyer wants the seller engaged after close for a certain period of time. They will have a map on when are we going to put them on our payroll? When are we going to change the IT platform? When are we going to change the fleet or the gas card or the chemical inventory, or maybe even move? So these sort of things happen in an integration planning meeting. Sometimes the integration planning meeting includes the seller pre-close, and sometimes it doesn't. But there is always a fair amount of integration planning pre-close, and that's a huge part of driving the value in an acquisition, certainly in our space. Next slide, please. So as the deals move forward, a lot of things will certainly be happening, whether it's with the buyers and sellers, attorneys, whether it's with due diligence teams, integration teams. There's a lot of moving parts. As the deal gets closed, we start to talk about acquisition execution, and that is integration execution and delivering value to the buyer. Buyers in every department inside of a buyer, if you think about it again in sort of a siloed way, whether it's the IT department, the finance department, operations, sales, marketing, fleet, purchasing, and on and on and on, will certainly be looking at the business and understanding how to drive value. And again, this is whether you're a local operator buying another local operator and just trying to grow from a local footprint out, or the bigger firms. They're always looking at the integration execution, the integration strategy, and most will be looking at acquisition metrics after the deal. Did we keep the employees? Did we keep the customers? These are things that are really, really critical post-close. Next slide, please. So whether you're growing beyond your first million, or you're at several million, or you're even a large regional pest control company or beyond, this one's always a bit of a fun exercise for me, because people a lot of times will say, well, how much will I get when I sell? Will I get X for my business? And I've even had people say, well, if I'm $1 million company, can I get $1.5 million, or can I get $1 million? And I think a lot of times what I try to say is, well, let's understand the business. We need to understand the business certainly before we can set expectations and understand what that business is going to be worth in the market. In this particular case, you have company A and company B. Both are doing, as an exercise, $1 million in revenue. Company B has a $250,000 in adjusted profit, where company A only has $50,000. Company A is doing $83,000 per year per full-time employee, where company B is much more efficient and doing $100,000. In company A, there are no best practices. There are no uniforms. The trucks are a mess. The service strategy is a mess. In company B, there's best practices all over the place. They're paperless. They're driven by IT. They're internet savvy. Their customers are on easy pay. There's no AR. It's a drug-free workplace, criminal background checks. They use GPS in the fleet, on and on and on and on. With company B, their service type is residential, termite, rodent. They have commercial pests, but they're very disciplined. Where company A, you have a problem, we'll solve it. There's no service type. They're all over the map. They don't have contracts, and their fleet is old and in bad shape. Where company B, their fleet's in great shape. So the question is, they're both doing the same amount of revenue, and this is going to be an obvious question, but just because they're doing the same amount of revenue, does that mean they're worth the same amount in a transaction? And the answer is obviously no. And the reason is because the best practices in the business are driving the value. They're driving the profit up in the case of company B, and they're going to drive the value of a transaction up for company B, where a company like company A is going to have a hard time selling, and they will be sold for far less than company B. So next slide, please. So when you look at acquisitions, whether you're a small company trying to grow in a local market or you're a big company, and I think for the bigger companies, this is pretty standard, but you're going to need to assemble a team. Next slide, please. Steve Jobs once said, "The secret of my success is that we have gone to exceptional lengths to hire the best people in the world." So the reason that I put that up there is that the best acquisitions that I've seen have really good teams involved. Next slide, please. Next slide. So as you build a team, you're really going to be thinking about a few positions, which is a business consultant or perhaps a business broker that can help you prepare and take the business to market, an attorney that should have M&A experience, a CPA or accountant, and post-close a financial planner. So at the end of the day, you need to be prepared to go to market if you're selling. And it certainly helps buyers when they see businesses that are prepared when the buyer gets the call, whether that's the acquisition department or Orkin or Terminex or somewhere else. So do you understand the financials of the business? Do you understand the value of the business so you have the proper expectations? Are you marketing the business properly? This team will help you make sure that all these things are taken care of. Is the purchase price negotiated accurately? Are the allocations done properly? Do you have the proper and adequate legal advice? I believe that legal advice is huge in this. You definitely want somebody that has M&A experience, perhaps industry experience, that can understand regulatory and other things that we may have to deal with in an acquisition. And at the end of the day, you want sound financial advice. And if you're a seller, certainly as the money comes in, you want to make sure that it's handled appropriately. Next slide, please. So from a business representative position, does the firm or people that are representing you, if you're selling, really understand the business, the industry, and how to present it? At our firm, we feel uniquely qualified to help in a pest control transaction. And when you have the right people, you will certainly maximize the value if you're selling. And from a buyer's perspective, it certainly makes the transaction flow easier just about every time. Next slide, please. So as I previously touched on, it's really important that as you have an attorney, it's not perhaps your neighbor that may do some other type of law. M&A is a specific type of law. You want somebody that's an attorney with that experience. You want the CPA, you want your accountant to certainly know how to handle the LOI, the allocations, and make sure that the financials are wrapped up ahead of the business, and a financial advisor to help if you're selling on the back end of the deal to make sure that you manage the wealth properly. Next slide, please. So a couple things to look at from acquisitions. If you're using acquisitions to grow, I wanted to give 3 examples of basically the way that things happen in an acquisition where your team, whether you're a buyer or a seller, because buyers are certainly going to have an M&A person involved. Rentokil has Alex Nye, who does an amazing job. Matt Whiting does a great job at Orkin, and others throughout the industry. And buyers certainly have their attorneys that are seasoned and experienced, their finance departments, their acquisition people. And so sellers need this team as well. In one case, this I'm going to call just case number 1. I'm also going to call this kind of M&A, mergers and acquisitions 101. Due diligence was complete. The closing date was set. And then all of a sudden, the buyer demanded to meet the employees 1 week prior to close. The response was effectively, no way, Jose. You do not, as a seller and a legitimate buyer, is not going to demand to meet with your employees pre-close. This is something where having the right team on both sides, these kinds of things don't happen. So this is where I call this M&A as sort of a team sport. Teams are really important in making successful acquisitions. Next slide, please. So another case is where the seller had a fleet of leased vehicles. It was always discussed as leased, and just before close, the buyer came in and didn't realize that it was a lease, wanted the vehicles, including the leases, paid off, and leases are assumed liabilities. So the buyer would ultimately assume that lease. So we ultimately worked through that case, but again, the team and sophisticated buyers and a good team for the seller will make sure these types of events do not occur. Next slide, please. So this one is key, and I would say that back to best practices, building businesses beyond $1 million, having the right best practices, and looking at HR. HR is a topic that is discussed in great detail in every acquisition between buyers and sellers. In this case, we discovered before we went to market that there were no non-competes in the company, but they definitely wanted to sell the company. This was a strategy and a direction that they were headed. They also had no history of a drug-free workplace, which I'm going to call best practices no-nos, certainly in our industry, certainly for buyers and certainly for sellers. Before we helped this company go to market, we worked with the seller's attorney and put in non-solicitation agreements that were assignable to the buyer. And we also made it a drug-free workplace, and the entire customer base was tested before the company was ever taken to market. Ultimately, there were no employees that were lost as a result of a conversion to a drug-free workplace, and no employees had any issues with signing non-solicitation agreements, and ultimately the buyer was extremely happy with this transaction. Next slide, please. So key takeaways, next slide. So we're going to kind of finish where we started, which is with the ham and eggs, which is be committed to the business, to grow it beyond $1 million, certainly. And whether you're buying or selling in our space, it takes an awful lot of commitment. If you're focused on growing the business or selling the business, best practices is critical to value. And focusing on growing the core, certainly retention in every transaction, in every business is a focus. And I would say that you always want to be prepared to sell. You want to have price leadership. Again, as earlier mentioned, you definitely, if you are not moving your business towards digital, you definitely want to begin to consider moving in that direction, and basically building a team of experts to help you run your business. Again, whether that's consultants, brokers, good lawyers. I know we're going to hear from Dan a little bit later, and CPAs, and making sure that you have the right team and the right people is certainly all part of getting beyond $1 million and having a winning strategy. So next slide, please. So Stephen Jobs, I think we're finishing up here, said, I'm convinced that about half of what separates successful entrepreneurs from non-successful ones is pure perseverance. Some of the subjects, whether it's moving to digital, non-competes, non-solicitations, drug-free workplaces, M&A strategies, these are not easy subjects, but they do take perseverance, and they do take a heck of a lot of commitment to build the business. So next slide. So that's it. I definitely want to say thank you to PCT and GIE and Dan and Brad and the team and all the sponsors as well. Thank you.
Thanks, Kemp. I've got a couple questions we'll go over with you real quick here. Kemp, you mentioned that COGS and payroll at 50%. Is that a pretty standard ratio, and does that typically include benefits?
Yeah, that's a loaded number. So benefits, fees, etc., taxes, that's a pretty loaded number, and that's a pretty standard number that you see. Again, you know, there's a plus and minus there, but you know, there's a lot of things tied to that, right? I mean, route density, fees, how you pay, when you pay, but all in, that's a pretty standard number, Brad.
Kemp, question was, what is your experience in revenue per full-time employee? Is there a breakdown in field versus office or admin?
There are breakdowns by position. It certainly varies by a company. They're wild ranges and wild numbers from time to time. 150 to north of 200 certainly per truck, depending on the service. And then admin numbers really are kind of all over the map, depending on the kind of technology and the way the company is run. But the revenue per employee per position, whether it's manager, admin, it could be broken down: pest tech, termite tech, lawn tech if there's lawn. All those numbers have interesting ranges.
Kemp, how often should non-competes be renewed?
Ooh, that's a great question. Boy, that's a great question. I'm going to start with every company in our industry should have either a non-compete or a non-solicitation agreement that is assignable. That should be done through a labor attorney or through your corporate attorney. It should be, and it's going to vary. Every single state has little different nuances in their labor laws and what they allow in statutes for non-competes. In terms of how often they're renewed, I'm not sure about the answer to that one. I would certainly have your business attorney guide you on that.
Okay, we got
the
one last
statutes,
question.
the labor laws don't typically change that much. So it's certainly not something I think you'd do every year, but that would be something I would suggest to run by your corporate attorney.
Okay, hey Kemp, we did get a couple more questions, instant message to us, but we're kind of up against it on time. We want to make sure we stay on schedule, so we'll be sure to forward those questions to you, and you can reach out to those folks individually. So
you bet.
Kemp, thanks again for a terrific presentation and being a part of our event this year.
Thank you. Appreciate what you guys do. This is a great event every year, so glad to be a part of it. Thank you.